Joining me right now, as always, is N Chandrasekaran, the top guy at Tata Consultancy Services. Needs no introduction. Thanks very much, Chandra. How would you describe the fourth quarter earnings performance, the reported numbers? Because I'm sure you've spoken to analysts, read what they've wrote, and they're all saying, well, numbers have missed expectations, consensus expectations.
I think there is optics and there is the mood, sentiment, and what lies ahead. But if you really look at the optics, the constant currency growth of 1.6% is a tad lower than the estimate. I would agree that it's a lowered expectation. But on the operating margin and the net margin front, it is significantly better than the expectation. 27.2% op margin and 24.2% net margin. And but if you peel the onion and then look at the CC, we had clearly indicated that the telecom and Diligenta and energy were the three headwinds we are facing. If you remove those and look at the rest of the business, which is a large chunk of our business, we have had a growth of 2.7%.
Telecom is about 9% of revenues, right?
Somewhere about
energy
that.
Energy is about 2%.
Yeah,
and insurance is about 2-3%.
No, it's not.
Diligenta is about
Diligenta
2%,
is a small one. So I think if you it's a significant drop, those three put together. So barring that, the growth has been 2.7%. So I think no cause of concern. First, that's the
barring
first point.
that, volume,
the business growth would have been 2.7%.
Dollar revenue has been about 2.
The constant currency.
Constant currency
would have been 2.7%.
Compared to the 1.6 that has come in right now.
Yeah. So that's a pretty significant jump. So fundamentally the things are good, and also if you look at the customer metrics, probably one of the best quarters in terms of customer metrics. 4 client addition in 100 million category, and it goes across the board all the way up to the 1 million category. Utilization is pretty good, and if you look at the deal wins, we announced 9 deal wins spread across markets. Includes BFS, includes North America. I mean, all the key things that you look for. See, what does the market look for? Market wants to know what is the exit rate, and there's a huge difference in the exit rate because of the currency volatility. So market wanted to know what will be the constant currency exit rate, which is about 4%, which is the same as the exit rate we had last year. So I think overall,
I just want to push on that particular point. What should one look at? And there are people who are divided between looking at constant currency, looking at reported numbers, right?
Yeah, I think as long as the volatility is not the way it is today, then you can look at reported numbers. Normally, we also don't go so much into constant currency. We try to give the reported number because it's the real number. Those are the numbers. Right? So we look at the reported numbers. But the fact is that this quarter, the last quarter and this quarter, the currency headwind has been just enormous. And look at the depreciation of pound and euro, Australian dollar, and Latin American currencies. Even in Latin America this year, we delivered a 5% growth on reported basis. But on the actual basis, more than 9%. And Europe, we reported at least a 10% gap between the reported growth and the constant currency growth. When such a deviation is there, it becomes important for us to come and explain. So the whole idea was to explain that the core business is pretty solid.
And that you got to look at the constant currency.
That's the only way I can explain. So that's what I did in the call yesterday. Normally, I've never gone so much into detail by segment.
So there's dollar against the rupee, dollar against other currencies, rupee against other currencies, right?
So dollar against rupee is all right by and large. But there has been some volatility, but it has been in a very narrow band. But whereas if you look at the euro, if you look at the pound, and it's pretty wide. Pretty wide.
Right. And the forecast, actually nobody knows, right? I mean,
nobody knows. So I think we can't really estimate. But we shouldn't complain because there has been swings on the other side as well. There was a quarter when it went from 61 to 68. I mean, not in one quarter, or a period of time. I mean, maybe 4 or 5 months. It just
went to 68, I think, late 2013.
Yeah. So I mean, we all benefited, and so we can't really complain when this happens. But we just have to be
when
conscious.
I guess you're saying the volatility is too extreme, you got to strip that out to just look at how the business.
Look at the core business is doing. See, if you look at, I also explained. If you look at BFSI per se, it gets clouded by the fact that the Diligenta had a huge degrowth. It had 11% degrowth last year. But if you remove that, rest of the insurance was again up 10% plus, 10 to 11%. The BFS was above the company average. So core BFS which is a chunk of our business, is doing very well. And there were other verticals, 6 verticals I named, contributing to 42% of our revenue, grew about 20% on CC terms.
Okay.
So I think in terms of business performance, barring the 2 or 3 areas where we are negative, though they were very sharp, pretty strong.
Overall, pretty strong. So I just want to ask you, so what is happening here now? Telecom, what is the...
See, telecom, I feel it's very volatile. That industry also is kind of going through the communication service provider segment. It's also going through a transformation by itself. So they are defining their own transformation, and you know, that results in volatility. Sometimes we get a discretionary project, sometimes we don't get. So there have been issues. I'm not talking particularly this quarter. I'm taking a 6, 7, 8 quarter view. If you take a last 1.5, 2 years view, so we've been looking for it to stabilize. So then it went into a degrowth. Then we said probably we've hit the bottom, but then it just been jumping up and about for us. So all we are saying is that as far as
it seems pretty similar to the telecom industry here in India.
No,
India
I think
the performance, I'm just saying.
I think the only point I'm making, limited point I'm making, is that we should expect volatility. So suddenly, if I show a 7-8% growth in a quarter in telecom, then you should not say you said telecom will not grow. I'm not saying that. All I am saying is that it's going to be volatile.
But you don't have certainty in terms of...
I don't have certainty. It's so that I'm calling out. Energy sector, I'm being very cautious. I'm not factoring in any growth, right? And Diligenta...
How much of this energy business has been, because I remember when we started talking, when oil prices started to fall in a secular, straight fashion. Is that largely the reason? I mean, investments have been put on hold?
Probably, yeah. All investments have been put on hold. There's no project kickoffs happening, and there's a cost optimization initiatives going on in all our energy clients. And the pipeline is pretty small. So the good thing is that we have a smaller exposure on one side, and then we only upside. So if we can gain customers during this time, then on this base we can start to grow. So we see it as a positive thing. It is a time that we'll have to find energy companies and partner with them. So we will definitely be very close to the market and try to see how we can partner with clients as they go through this recovery process.
And Diligenta? I mean, is there...
Diligenta, I think it will have a degrowth this year. And when it will recover, I can't say. I'm looking for deals.
All right, fair enough. The attrition rate, which has also come up.
Attrition rate has come up. I think it's to some extent it's an indication. I think if you see the entire 4 quarters this year, it's been about 0.8 to 1% increasing quarter on quarter. I think that from here it should try to come down.
But this particular number, would you say, does it have any sort of, direct take off from what happened, the unpleasant episode?
No, I don't.
I mean,
from
in the last quarter? No, you don't think so? I mean, apprehensions about involuntary attrition and things like that?
Not at all.
None of that?
Absolutely none of that. And we believe that we have a very strong bonding with employees, and employee retention is core to the philosophy of the company. So we will continue to do everything we need to do to be able to...
Has that episode been now put behind?
Yes.
Completely?
Yes.
I mean, everything is clear and...
See, I think, we had explained it before. There was never a large scale, large scale involuntary attrition. So that's never an intent. Never an intent.
And now, of course, there is a one-time cash bonus for employees.
This is more to do, again, don't link the two. I think this is more to do with the 10th year anniversary, and I explained that the market cap has almost grown 10 times, 8.8 billion to 80 billion.
So you want employees to share the...
we did share with shareholders. So we...
No, but I think it's an important point. I mean, I was talking to an investor called Sanjay Bhattacharya. He used to run HDFC Mutual Fund. And he said, well, for IT companies, asking him, how do you evaluate IT companies and their prospects? He said, the number one issue for me is how they treat employees, right? Because it's a service business, it's employees, and it can't just be numbers. I mean, thousands of numbers, lakhs of numbers, and things like that. So,
absolutely.
And you manage that very, very well.
Absolutely. I mean, it's very important because we are, at the end of the day, we are a team. We work in teams and we work with customers, and talent is very important. The longer that we can keep employees, the company culture is created by the longevity of employees, and then Obviously, there are things like performance management, there are things like retraining, because in our industry the technology shifts are pretty large.
Yeah.
So now we are going through one of those transformations. So there's going to be a large scale investment in training, which we are doing. Luckily for us, to manage our scale, now there are lots of possibilities.
Okay.
Everything need not be classroom
and
based.
what is that transformation you're talking about? Which
to digital. The whole world is going to.
Okay.
The whole world is.
Actually, I have a
digital.
question about that. I'm going to come to that. But just to stick with employees, this low intake that in the fourth quarter compared to historically what you do, how should one read that?
No, I don't think you should read read anything.
Right.
I think we are, as I said, there is a strong demand environment.
Okay.
And the numbers that Ajay have given out, I think he has spelled out some 67,000 or some number thereabout. And that's based on the plan that we have, and we also factored in attrition coming down.